Hey everyone, welcome back. Today we're taking a deep dive into Reliance Industrial Infrastructure Limited. You might know them better as RIL. We're going to be looking at their Q3 FY25 performance.
Sounds good.
We've got a pretty interesting mix of stuff to work with today. We've got the company's official filings,
Mhm.
and we've also got some questions that investors have sent in. Should give us a good sort of roadmap for where to focus our attention today. Ready to get started.
Absolutely. Let's dive in.
All right. So first things first, we always start with revenue, right?
Yeah.
REL's consolidated revenue for Q3 FY25 came in at 1,860 lakh,
Okay.
which is actually a bit of a dip compared to the same period last year, Q3 FY24. Back then, they reported 2,052 lakh.
Interesting.
Yeah, and it's kind of a quirky little detail here. Both the standalone and the consolidated revenue figures are identical. So that tells us that RIL's primary business, like their core operations, are essentially carrying the weight of their entire revenue. Any subsidiaries or associate companies that they might have aren't really moving the needle much.
So essentially what you're saying is this revenue dip that we're seeing
Yeah,
is likely a direct result of something happening within RIL's core business. Makes you wonder, what's going on with the utilization of their infrastructure assets.
exactly. Like, is this a blip or is this a sign of something a little more concerning? Guess that's what we're here to figure out, right?
Right, exactly.
All right, so we've got revenue on the table. Let's talk profit. Consolidated net profit, well, it's down year over year.
Oh, wow.
274 lakh for Q3 FY25 versus 362 lakh for Q3 FY24.
Okay. But remember we talked about standalone versus consolidated figures.
Right.
The standalone net profit, it tells a slightly different story. It did decrease too, but not quite as dramatically as the consolidated number. Went from 270 lakh down to 248 lakh.
Okay, so hold on a sec. Why is the consolidated profit down so much more than the standalone profit? What's going on there? It seems like we're getting these mixed signals.
Yeah, you've hit on a key point there. This difference in the profit numbers likely comes down to RIL's associate company, Reliance Europe Limited. Remember, the consolidated figures include the performance of this associate company, whereas the standalone numbers only reflect RIL's own operations.
So is it possible Reliance Europe Limited is like facing some headwinds? Is that what's dragging down the overall group profitability?
It's a definite possibility. And to make things even more interesting, there's not a lot of information about Reliance Europe Limited in these reports.
Really?
Yeah, they're kind of a shadow player in this story. Like, we know they exist, the auditors mention them, but we don't have much detail about their business activities or their financials.
So we can't really tell what impact they're having on these numbers or how much risk they might be adding to the overall picture.
Exactly. And you know what else? The auditor also pointed out that Reliance Europe Limited's financials are unaudited.
Uh-oh.
Yeah, unaudited financials are a bit like buying a used car as is. You
Right.
don't have that same level of assurance that you would get with a car that's passed a rigorous inspection. It doesn't necessarily mean there's something wrong, but it definitely introduces a layer of uncertainty.
Okay, so we got this kind of mystery surrounding Reliance Europe Limited, but let's shift gears for a second.
Okay.
Let's talk about RIL's core operations and specifically how they're managing costs, because I got an investor question about that. They want to know how RIL's cost structure is impacting their profitability.
That's a smart question. It can give you a lot of insight into how efficiently a company is running its business, how they're making decisions.
Absolutely, absolutely. So let's walk through some of the key expense categories for both standalone and consolidated operations in Q3 FY25. We'll compare those to last year, same period. See if any big changes jump out at us. What do you think?
That sounds good.
Okay, so first up, we've got employee benefits expense. Standalone operations, it was 2.50 lakh.
And for the consolidated?
Same, 2.50 lakh.
Oh, interesting.
Which, that actually tells us something, right? It suggests Reliance Europe Limited isn't really adding much in terms of employee costs. But you know what's even more interesting? Compare those numbers to Q3 FY24, last year.
Okay.
Big difference. Employee benefits were 4.11 lakh
Wow.
for both standalone and consolidated. So they've really managed to significantly reduce their employee costs year over year.
That's good, right? Lower costs should lead to better profitability, hopefully.
That's the idea.
Okay, what about some of their other expenses?
All right, so let's move on to depreciation and amortization. A little bit higher than employee benefits. Standalone is 37 lakh for Q3 FY25.
Okay, and consolidated.
Yep, same again, 37 lakh. Looks like Reliance Europe is a bit of a silent partner when it comes to expenses, huh?
It does make you wonder what exactly they're doing over there. But okay, back to depreciation. What were the numbers for Q3 FY24?
Let's see. Okay, last year it was 58 lakh for both, standalone and consolidated. So actually depreciation has gone up year over year.
Okay. So that could be a couple things, right? Could be the age of RL's infrastructure assets, maybe? Or maybe they made some new investments a while back and we're just seeing the depreciation from that hit now.
Interesting. Okay, how about operating expenses?
hmm
Standalone Q3 FY25 is 2.89 lakh.
And consolidated.
No surprises here. Also 2.89 lakh, but wait for it. In Q3 FY24, it was 5.12 lakh for both. So they actually managed to decrease their operating expenses too.
Wow, that's impressive. Seems like they're putting some effort into controlling costs, right?
Yeah, which, again, good for their profitability, theoretically.
All right, keep going. What else do we have?
Okay, next one's pretty small. It's rent. Standalone is 87 lakh for Q3 FY25 and, of course, consolidated.
87 lakh.
You got it.
Yeah.
But last year, it was 78 lakh. So we have seen a slight increase.
Okay.
Nothing major, though.
Yeah. Yeah. Small increase like that probably won't move the needle too much. Okay, let's see. What else? What about other expenses? Sometimes that category throws up some surprises.
Okay, here we go. Other expenses, always a bit of a wild card. Standalone for Q3 FY25 totaled 9.01 lakh.
And
Consolidated, you guessed it, also 9.01 lakh. But hold on, here's where it gets a little crazy. Q3 FY24. It was only 5.78 lakh for both.
oh, wow. That's a big jump. Is there any detail in the filings about what might be driving that increase?
Sadly, no. No breakdown whatsoever. Which is a bit frustrating because now we don't know if this is just a one-time thing or maybe it's a change in their accounting methods or if it's something, worth being concerned about.
Yeah, it's definitely a bit of a yellow flag. Like if you were thinking about investing in LIL, this is something you'd want to dig into a bit deeper.
For sure. Makes you wonder about their transparency, right?
Definitely.
But hey, that's why we do these deep dives.
Exactly.
To unearth these little details, try to piece together the bigger picture. So far, it's a mixed bag with RI, right? We see good news. Decreases in employee benefits, decreases in operating expenses. That's positive. But then we've got this increase in depreciation and this big mystery surrounding those other expenses. And of course, let's not forget Reliance Europe Limited. Seems like they might be playing a bigger role in all of this than we initially thought.
Absolutely. There's definitely more to this story than meets the eye. To really understand what's going on here, I think we need to start looking at the bigger picture.
Okay.
Like, how does RIL's performance compare to broader trends in the industrial sector? Is this just a company-specific issue, or are there larger forces at play?
That's a great question. And to answer that, we need to think about RL's unique position in the market. Remember, their core business is providing infrastructure support services, and mainly to Reliance Industries Limited. So their success is heavily dependent on Reliance Industries Limited.
Exactly.
It's like they're two sides of the same coin.
Pretty much. If Reliance Industries is doing well, RIL will likely benefit. But if Reliance Industries starts to struggle, that could spell trouble for RIL too. Think of it like a symbiotic relationship, where the fate of one is closely tied to the fate of the other.
That's interesting. So by analyzing RL's performance, are we actually getting a glimpse into how Reliance Industries itself is doing?
Precisely. It's like we're peeking through a window into this whole Reliance ecosystem, seeing how the different parts are interconnected.
Fascinating, right? It's amazing how much one company's financial statements can reveal about the broader industry and the companies they're linked to.
Absolutely. Understanding these relationships, the dependencies, that's key. In this case, RIL's reliance on Reliance Industries is definitely something to keep in mind.
Okay, so we've got the industry context, but what about RL's own growth? There's this one line in their report that really stood out to me. They said, the company presently does not have any expansion plans on the anvil.
Oh, wow. Okay. That's definitely a statement that makes you think, right? Especially given their reliance on Reliance Industries and, that revenue dip we were just talking about.
Right. What does this mean for their strategy? Are they just being cautious? Or are they waiting for a better opportunity? Or maybe they've got something else up their sleeve that they're not telling us about.
It's really hard to say without more information. Could be that they just don't see many opportunities for growth in their current business model, so they're playing it safe.
Okay.
Or maybe they're just being super conservative, focusing on making what they already have work as efficiently as possible before they try anything new.
It's like they're waiting for the perfect moment to make their next move.
Exactly. And sometimes the best strategy is to be patient. But of course, you have to wonder, are they being too cautious? Especially with everything going on in the economy right now and, their dependence on Reliance
It's a
Industries.
tough balance, right? You want to be strategic, but you also don't want to miss out on any good opportunities.
Absolutely. It's a balancing act for sure.
So we've got a lot of interesting threads here, right? Revenue dips, cost fluctuations, a mysterious associate company, and then there's this whole question about their future growth plans or lack thereof. It's a lot to process.
It is. There's definitely more to unpack here. And I think the next step is to really delve into what these findings mean for IL's overall performance.
Right, but before we get ahead of ourselves, there's one more intriguing little detail in Rael's report. They mentioned providing infrastructure support mainly to Reliance Industries.
Oh, good catch.
What do you make of that word, mainly?
Interesting. Mainly suggests that while Reliance Industries might be their biggest client, they might also be working with other companies, right?
Exactly. And that opens up a whole new can of worms, doesn't it? Who are these other customers? How much business are they doing with Rael? And maybe even more important, could these customers be the key to Rael's future growth, especially with the lack of expansion plans they mentioned?
Great questions. But unfortunately, based on what we have here, we don't really have the answers. We'd need to do a little more research, maybe look at some industry reports or go back and look at some of Ariel's older filings to get a better handle on who they're working with.
So it's kind of a cliffhanger.
Yeah, a little bit. We've got this tantalizing piece of information, but we need more pieces to complete the puzzle.
It just goes to show, financial analysis can be like a detective story. Even with all the data in the world, sometimes you still need to do a bit of digging to uncover the whole truth.
Absolutely. And that's what makes it so interesting.
Well said. We've covered a lot of ground in this deep dive, but we're not done yet. There's still more to uncover. Stick with us, and we'll be back soon to wrap up our analysis of Reliance Industrial Infrastructure Limited's Q3 FY25 performance. Okay, so we're back and ready to jump back into this deep dive of Reliance Industrial Infrastructure Limited's Q3 FY25 performance. But before we get too far, let's just kind of, recap what we've talked about so far.
Yeah, good idea. It's been a lot of info already.
It has. All right, so we started with revenue trends, and right away we saw that dip, both consolidated and standalone compared to last year, same period. And if you remember, that dip is really all about their core operations. It's not like they've got all these subsidiaries or associates dragging things down. Those other parts of the business aren't really moving the needle much in terms of revenue.
Yeah, which, I mean, that kind of makes that revenue dip even more noteworthy, right? If
Right.
their core business is what they're relying on, then any problems there that could really impact their whole picture makes you wonder if maybe they should be thinking about, I don't know, branching out a little bit.
Yeah, it's always a risk to put all your eggs in one basket. But okay, let's move on to profitability. Remember, we saw consolidated net profit is down year over year, and standalone profit is also down, but not as much.
Right.
Our working theory is that this is all because of what's going on with their associate company, Reliance Europe Limited.
Yeah, that's what it looks like. It's possible Reliance Europe is, going through something right now. Maybe they're having a tough time, and that's what's pulling the group's overall profit numbers down. But, and this is the big but, we don't actually know that for sure. We have very little information about their operations or even their financials, really.
It's like trying to solve a puzzle, but half the pieces are missing.
Yeah.
And then, to make matters worse, their financials are, what was it, unaudited.
Right, exactly.
Yeah.
Unaudited. So we're kind of working in the dark here a little bit.
It definitely raises some red flags for investors, right?
Yeah. I mean, transparency is super important, and without it, it's hard to be confident in those consolidated numbers. Definitely something to keep in mind as we go through the rest of this.
For sure. Okay, so let's switch gears now and talk about cost management. We've got all these detailed numbers about their expenses.
Okay.
So we can look at how those have changed year over year, both for their standalone and consolidated operations.
Yeah, that's a great way to see how they're handling things, get a better sense of how their profitability might be affected.
Exactly. Okay, so let's start with employee benefits expense. We see a decrease year over year in both the standalone and consolidated numbers. Standalone employee benefits went from euro 4.11 lakh in Q3 FY24 down to euro 2.5 lakh in Q3 FY25.
Okay, and consolidated.
Same thing. Consolidated employee benefits also down from 044.1 lakh to euro 2.50 lakh. Looks like they've been cutting costs related to employees.
Yeah, that's definitely a good sign, right? Shows they're being smart about managing expenses that can help protect their profits, even when, like we said, revenue is down. And it also kind of confirms what we were thinking earlier about Reliance Europe Limited. Doesn't seem like they're adding a whole lot to the company's overall employee costs.
Right. Lower employee costs are always good, but we can't just look at one thing in isolation, right?
Hmm.
What about their depreciation and amortization expense? That's up this year. Standalone depreciation increased from 58 lakh last year to 37 lakhs this year.
And I'm guessing the consolidated figure is the same.
You bet. 58 lakh down to 37 lakh for consolidated depreciation as well.
Okay. So that increase could be a few things, right? Could be because their infrastructure is getting older, or maybe they invested in some new assets a while back, and now we're seeing that depreciation hit their books. Or, it could even be that they've changed their accounting methods.
Right, yeah. If you were really serious about investing in RIL, this is something you'd want to look into more carefully. Figure out what's causing that increase in depreciation and if it's going to keep going up.
Absolutely. Okay, what about operating expenses? What are we seeing there?
Good news. Operating expenses are down. Standalone operating expenses went from 5.12 lakh in Q3 FY24 down to 2.89 lakh in Q3 FY25.
And consolidated?
You're on a roll. Also down from a 5.1 high L to 2.89 lakh. So it seems like they're really working on reducing costs in their core operation.
Yeah, that's encouraging. Seems like they're trying to balance out that dip in revenue by, being more careful with their spending. Let's hope that continues. What's next?
Okay, next up is rent. This one's a pretty small expense for them, but standalone rent came in at 87 lakh in Q3 FY25, which is up a bit from last year's euro 70
Okay,
lakh.
I think I can guess what's coming next. Consolidated rent is also euro 77, up from 78 lakh.
You got it.
All right, so a small increase. Probably not going to have a huge impact on the overall picture, but still good to be aware of. Okay, ready for the fun part. What about other expenses?
Yeah. Other expenses, always a bit of a wild card.
Right.
All right, so for Q3 FY25, standalone other expenses were 9.01 lakh.
And Jimmy one.
Consolidated, you already know, also 9.01 lakh. But get this, last year, Q3 FY24, it was only 5.78 lakh, both standalone and consolidated.
Whoa, okay, that's a big jump. Do they give any kind of explanation for that increase? Is there anything in the filings that tells us what those other expenses are?
Nope. Nothing. Not a single detail. Which is a bit of a head-scratcher. We don't know if this is a one-time thing or if maybe they're just accounting for things differently now or if it's something we should really be worried about.
Yeah, it's definitely not ideal. Like if I were a potential investor, this would be a big question mark for me. If you can't explain a big jump in expenses like that, it's a bit of a red flag. Makes you wonder if they're hiding something, right?
Exactly. And, it's a good reminder that numbers don't always tell the whole story. Sometimes you gotta look beyond the numbers to really understand what's going on.
100%. Okay, so we've looked at IIL's cost structure, but we got to remember to connect this back to the bigger picture. We were talking earlier about how the performance is so closely linked to Reliance Industries Limited, their biggest customer.
Right. How does all this cost analysis we've been doing, how does that play into that relationship?
Well, I think it shows just how important it is to understand not just what's going on inside a company, but also all those connections they have outside the company. Like in this case, if Reliance Industries is doing really well and they need more of RIL's services, well, then maybe some of these cost increases make sense, right? Like maybe RL had to buy new equipment to meet that demand, so now their depreciation costs are higher. Or maybe they're spending more on operating expenses because they're doing more business.
So you're saying, like, RIL's costs could actually be a reflection of how much business Reliance Industries is giving them.
Exactly. What happens with one company can really affect the other.
It's a good reminder that companies don't exist in a vacuum, right? They're all part of this bigger system.
That's right. And for RL, understanding that relationship with Reliance Industries, that's a big part of understanding their overall financial health.
All right, we've covered a lot in this deep dive. Revenue trends, their costs, and of course, their relationship with Reliance Industries. We've even uncovered some mysteries, like their associate company, Reliance Europe Limited, and their decision not to expand right now. But before we wrap things up, there's one more piece of the puzzle I think we should look at.
Oh, what's that?
Remember how IL said they provide infrastructure support mainly to Reliance Industries Limited? We talked about it a bit earlier, but I think it's worth revisiting.
Yeah, I agree. That word mainly, it suggests there might be more to the story, right? Like maybe there are other customers we haven't even considered yet.
Exactly. So now the question is, who are these other customers? What do they do? And could they actually be the key to IL's future growth, especially since they're not planning on expanding their current business?
It's like we found this secret door in the middle of our deep dive. Who knows what's behind it?
I like that. We're like financial detectives uncovering clues and trying to piece together the whole mystery.
Exactly. Makes it a lot more fun than just looking at numbers on a page, that's for sure. But unfortunately, right now, we don't have much to go on. It's like we've hit a dead end. We need to do more research, maybe look at some industry reports, or see if there's anything in RIL's older filings that can tell us more about who their customers are.
It's kind of frustrating, right? We have this little clue, this word mainly, but we
Right.
don't have all the answers yet. Shows you that even when you do a really thorough financial analysis, sometimes you still need to like do some detective work to get the full picture.
That's right. But hey, that's part of the fun.
True. All right, so we've covered a ton of ground in this deep dive, but we're not finished yet. We'll be back soon to wrap things up, give you some final thoughts on Reliance Industrial Infrastructure Limited's Q3 FY25 performance. Stay tuned. Okay, so we're back. We've covered a lot of ground with Reliance Industrial Infrastructure Limited. Lots to think about. Ready to wrap things up.
Yeah, let's do it. Bring it all together.
Okay, so just to kind of, refresh everyone's memory, the big thing that jumped out at us was that dip in revenue, both consolidated and standalone. It's not looking good compared to last year. And remember, that dip is all about what's happening in their core operations, not their subsidiaries or associates. Those other parts of the business aren't pulling their weight when it comes to revenue.
Right, exactly. And that's kind of a big deal for REL because their core business, that's what they're banking on. So any slowdown there, that could have a ripple effect on their whole performance.
Exactly. And then we looked at profitability, and, well, it's a mixed bag. Consolidated net profit is down more than standalone net profit, and we think that might be because of their associate company, Reliance Europe Limited. Remember, the one with the unaudited financials.
Oh, yeah. That whole thing is still a bit of a mystery, isn't it?
Mm.
It just goes to show sometimes the most interesting parts of a company's story, they're not always right there in the headlines. Sometimes you got to dig a little deeper to find the really juicy stuff.
Totally. We also spent a good chunk of time looking at their cost structure. There were some interesting trends there, too. Employee benefits and operating expenses, those are down compared to last year, which is good news. But then depreciation and those mysterious other expenses, those went up, and we're still not really sure why.
Yeah, it's kind of like two steps forward, one step back with their cost management.
Mhm.
On the one hand, it's good that they're being careful about employee costs and operating expenses, but then that increase in other expenses, especially without a clear explanation, that's definitely a little concerning.
It is. And then, of course, we have to think about the bigger picture. We talked about how closely RIL's performance is tied to Reliance Industries Limited, their main customer. Like those two companies, they're basically joined at the hip.
Right. It's a symbiotic relationship. If Reliant Industries is doing well, RIL will probably do well too. But if Reliance Industries starts to struggle, that could spell trouble for RIL. So it's almost like looking at RIL's performance can give you some clues about how Reliance Industries might be doing as well.
Makes sense. And then finally, there's that statement from RIL about not having any expansion plans right now. Makes you wonder what their game plan is, right? Are they just playing it safe, waiting for the right moment to make a move? Or maybe they've got something else up their sleeve that they're not ready to share just yet.
It's a tough call. Could be they're just being super cautious, especially given their reliance on Reliance Industries and the fact that their revenue is down. Or maybe they see the writing on the wall and they're like, okay, we need to figure out a new direction.
It's a real head scratcher. So, anyone out there who's thinking about analyzing RIL, or any company really, here's my advice. Don't just focus on the big, flashy numbers. Take some time to really dig into the details. Look for those little clues, like that word mainly, when they were talking about Reliance Industries, because those little details can give you some really valuable insights.
Totally. And don't be afraid to ask questions. If something doesn't make sense, don't just brush it aside. Dig in and see if you can figure out what's really going on. Financial analysis, it's kind of like detective work, right? You're piecing together clues, using your judgment, and coming up with your own theories.
Exactly. And sometimes those theories lead to even more questions, like with RIL. Remember that secret door we found? The one that led to those other customers, the ones that they didn't name. Who are they? What kind of business are they doing with RIL? And could they be the key to the company's future growth? We don't have those answers yet, but it's definitely something worth exploring further.
Absolutely. And that's what I love about financial analysis. It's a never-ending process of discovery. There's always something new to learn, something new to uncover.
Couldn't have said it better myself. So yeah, keep those thinking caps on, folks. Stay curious and keep asking questions.
That's all for our deep dive into Reliance Industrial Infrastructure Limited. We hope you enjoyed it. And until next time, happy investing.